You can level up your trading. We're going to use 3 different indicators. I'm going to explain how to use them in tandem. I'm going to do it the best way I can. Hopefully you guys get some value from the video. If you do, you know what to do. But we're going to first go over to the live crew. This morning we had a trade. This is how it panned out. You can notice that I held in drawdown. Now the stop there equals about 0.5% of my account. I use soft stops. I don't typically use hard stops. If I see my idea is still valid, there's no reason for me to exit the trade. And I talk about that a lot on my trading channel. If you're not a fan of that, that's fine. You can use hard stops. But in my opinion, you'll just be paper cut after paper cut. And that's just what happens to traders. So let's go back over to the actual chart. This is about how we use 3 different indicators to give us a better story as to what's happening with price. First of all, this is the tutorial. I'm going to make this really short and sweet. I use 3 different indicators. I'll leave the links in the description of the video, but these 3 indicators show me what is underneath price. So take for instance, this long that I took over here. Why did I hold here and hold until price went up? And let me show you what price did. It went up, okay, came back down, went up, and then decided to finally go down. But why was it that price went up? Why did I hold this? Well, it's as simple as understanding divergences. Now, you can go and I'll actually leave a link to a divergence chart for you guys so you can have that. But the divergences, if you learn them on a very basic level, they'll show you what's actually happening underneath price. Now, a lot of people use volume or wave divergences. What I'm using here are these 3 different indicators. First of all, this top one is volume. And it has to do with order book volume. The second one is CVD. That's cumulative volume delta. That is what's happening inside of these candles. So although we're seeing price make a lower low, right? A lot of traders go, oh, it's breaking structure or making a lower low. And now we're going to sell off right down here, or there's a breakout trade happening. When in fact, if you knew about CVD, cumulative volume delta, you would know that nothing's happening. In fact, what's happening is that maybe the order book's thin down here. I don't know, but you're seeing buyers step in. In fact, if we look at the range that I highlighted, this is where price was in a range. Okay, this is a consolidation range up here. And I highlighted price. So this is CVD in a range. Price did what? It broke that range. Did CVD break the range? Yes or no? Well, no, it really didn't. Here's the range. It didn't break that. And if you look at this line that I created, this vertical line, you'll see that CVD popped above that range right there. That's where it popped above. Now on that same line, look at where price is at. It's lagging, right? It's behind. So I call this a hidden divergence, but mixed with a bullish divergence. This is when you see a climb in volume. This is the money flow index here. You also saw money flow index kind of climbing up here. And you see volume not really giving you too much of a downward sign. If anything, just kind of horizontal. Then what does that mean? Well, price going lower while these indications are going higher means that there's an undertone of buying. There's an undertone of buying pressure happening, and we want to get in on that move. So that's why I held the trade. We ended up popping above the range. Now, as we popped above the range, we saw that a little bit of buying pressure was, or selling pressure was being implemented up here, and you could see that on a lower time frame. And look at this. I'm just going to highlight this for you. So you see the wave on volume diminishing, meaning the trend might be, stopping, and you see this happen. You see price make a higher high right here, and what do you see volume do? You see volume diminishing. It's making a lower high. Okay, so that's an early sign that, you know what, we got VWAP right here as well. I do have the VWAP indicator. That's probably the most used indicator in all of trading. Now, I typically don't make a lot of trades with VWAP, bouncing off of it or whatever, but I could see a case for using it to see where you're at for the day. Are you stretched out? In any case, maybe you have a divergence like this and use VWAP to bounce. But anyways, so what else is happening? Well, we see a divergence over here as well. We see what else is lining up, right? So we use these to line up. Look at what's happening. We have our cumulative volume delta going down. We also have the money flow index going down, right? So these are, and going way down. Those are the things I see. Let me make this right here. So at that point, we got out of the trade, and we got out pretty much at the top. Like that was the top of that move, And as soon as we saw that, as soon as I see this candle close, this volume dip, I mean, I'm out. There's no reason to stay because there's a new story developing. So another thing that I want to mention before I take off here is that you can use a higher time frame as your secondary confluence. Take for instance, guys, right now, what do you see? Take a look at the chart. What do you see? All right, we'll take a look at volume first. We're just going to highlight the waves. So what is price doing? What is volume doing? Price went down, volume went down. All right, let's take a look at the prior wave over here. All right, and take a look at cumulative delta. We don't want to get too far away with price action. Okay, so I don't want to be looking way over here. We want to go, what was the prior wave? And the prior wave that I see is right here on cumulative volume delta, right? That's going up. So where is price with the same wave? It's going down. What is that? That's a bullish divergence. Okay, so we have a bullish divergence. We have volume not really giving us much of anything. And what is money flow? Let's open up money flow and see. What I do is I look at where I measured with my cumulative volume delta. So I put them all in the same spot, pretty much the same spot, okay? No real divergence here, okay? You got money flow going down, cumulative volume going up, and volume flow going down. So this is not really a trade setup. All right. Although you have one indication of the CBD going up, this is not really a trade setup. Now, what I would be interested in on this 5-minute is if possibly we see the CBD here pop above prior swing level right here. If we can see something like that happen, all right, then what I could be open to is a possible long, because what that's saying is that price should be up here, right? So it's saying price should be up there. But if it's not there, then what is it doing, right? So if I can see volume going in the direction and maybe even, you know, getting up here, like if volume can get up here before price does, or I have, look at the money flow. Money flow is cruising right now. So money flow is saying, yeah, we are going to the tops right here. Look at that. In real time, you're seeing this play out right now. So, I mean, this is the swing. This is where price should be according to what? Well, money flow I want to see. I want to see CBD, and volume might lag here just a little bit. So this is a no trade. This is not a bullish divergence. This is nothing. This is no bullish divergence right there. I want to see at least 2 out of these 3 indicators show me the bullish or bearish sign. But if 2 of these indicators can get above this prior swing level before price does, then I'm taking the long. All right. So sometimes you got to hold through it. And how you know to get out of the trade is really simple. As soon as the story does not make sense anymore. So if I were looking, let's say CBD popped above this line, right? But price didn't get there. All right. And it started to turn back down right away. And, you know, price went down and CBD broke this bottom swing level, or one of these indicators broke the bottom swing level, then I would be, that's the idea, game over. You know, the idea is just not intact anymore. So I like to hold trades until the idea is done. Sometimes that can get you into trouble if you're not sized correctly, because take, for instance, this was a 1% drawdown, just under 1% drawdown on my account, but I would have needed to see price would have probably had to go about 2% maybe for me to actually get out of that trade, right? And another thing that I like to do, so this may not be very popular for a lot of you guys, but I like to add to my positions, right? So if I see that price, let's say price did that. Let's say it made a lower low, whatever, but I see that nothing broke and it's still a bullish divergence, and maybe there's a new bullish divergence forming, right? And there's no bearish divergence to form. Then I will go ahead and add to my position. As long as I'm not in a dangerous place, I'll take this and add and add another long if that's the case. Okay, so I am open to adding positions. I think it can be extremely powerful, and I do it all the time, guys, all the time. And I'm not saying I win every single trade, but you got to know when to fold it. Know when to hold them, know when to fold them, right? So anyways, I wanted to break this down. I hope this was a valuable video for you guys. Subscribe to the channel if you're not subscribed, and I will drop more like this. Let me know in the comments what you thought, if this helped, and if you're going to be adding these, I'll leave the links in the description, and I'll see you guys in the next one. Bye.